Welcome back to Real Estate 101. Today we're going to continue our discussion on mortgage financing and talk a little bit about business for self solutions. And I'm pleased to be joined once again by Tracy Brock of Dominion Lending Centers. Tracy, welcome back to the show.
Thank you, Joe. It's always a pleasure.
All right, Tracy. So what are the general guidelines that lenders look for when business for self people are trying to get a mortgage?
So what they want to know, first of all, is how long the business has been in business. They want it to be a minimum of 2 years. They will make some exceptions, but it's very rare that they'll make those exceptions. They want to know what the income is that you're claiming on your line 150 of your notice of assessments and what you're paying tax on. And they want to know the type of business that you're in and the relatively to your gross income compared to what your claimed income is.
Okay, so let's talk about the business type, because some people operate businesses as sole proprietors,
Yep.
and others operate business through corporations.
Mm-hmm.
Do they look at it the same for both?
Not every lender. It's everything. It's very subjective with business for self lending, depending on the lender. So some lenders will look at a corporation and you're T4ing yourself out as that's your income.
Okay.
Right? So that's the income you're claiming. That's the income you're paying taxes on. You deduct those taxes just as you would any other employee from your regular pay. When you're sole proprietor or partnership, then they look at it a little bit differently than that as well. But it's not just the type. It's not just that type of business. What I'm talking about is that what a claimed income is for a cab driver compared to somebody who is maybe in the technological field, somebody who is a commissioned real estate agent to somebody who is, knitting scarves.
Right.
You know what I mean? It's the type of business and the reasonability of the income that they're using. They're grossing as well as what they're claiming for income tax purposes.
Okay, so let's talk about that. Let's talk about what you mean by claimed income.
So claimed income is the income that you pay taxes on. And that is the number that the lenders are going to use to qualify you for a mortgage.
Okay, so when you say the number you pay taxes on, again, let's talk about business people.
Mm-hmm.
They'll say gross, they made $100,000 that year in gross sales.
Yeah.
But after expenses and their write-offs, they only really made $20,000.
Right.
So which number do they use?
So that's when you go into what's referred to as a stated income. And they would use the net claimed income, so the $20,000, and you state your income to be reasonable over and above that $20,000 income to qualify. So I always say to people, you either pay the man or you pay higher interest rates. So with a stated income, it's a very, that's basically where majority of business for self people fall under that category.
Stated income.
Mm-hmm.
All right. So what about if their claimed income doesn't support the purchase price of the home?
So then they have to do what's called a stated income. And the majority of lenders with business for self and stated income, whether you have the minimum down payment down or you have 25% down, they still insure it.
Really?
Yeah, they don't necessarily pass those costs over to the borrower in every instances. However, they will insure it. And you have to, there's only Genworth and Canada Guarantees now that will do what they refer to as a stated income program. CMHC is not interested in that business anymore, so they've revoked that whole program out of their system. So now we have 2 insurers opposed to 3 insurers to qualify those deals.
Okay, so for stated income, let's talk about Canada Guarantee and Genworth.
Yeah.
What is their criteria?
Well, the main criteria is business income has to be reasonable. They cannot have a $20,000 claimed income and say, but really, I make 80.
Right.
Okay. It has to. They look at the type of business again, like taxi driver opposed to construction worker. They look at what your line 150 says and how much you're grossing it up. And typically, they're only accepting 50% gross up. So if you make 20, that means that you're stating your income at 30. And if you have a spouse that's earning $60,000 or $70,000 a year and you only need that 30, then you're okay.
All right.
But if you're the primary breadwinner and you're only claiming an income of $20,000, then you're not going to get approved with the insurers.
All right. So what about minimum down payments? How much is it?
So it goes back to what income you're claiming. If you're claiming enough income to do your mortgage in a conventional manner, you earn $100,000, you claim $70,000. That's all you need to qualify for the mortgage. You can put 5% down.
Okay.
When you're doing under the stated income program, you must have a minimum of 10% down payment. Doesn't mean that you're going to get it with 10%, but you must have a minimum 10%.
Okay. And what about insurance premiums?
The insurance premiums under a stated income deal are definitely higher, depending on, again, it fluctuates depending on how much of a down payment you have, but it is definitely a much higher rate than the traditional 2.4 if you were a salaried employee for 10% down.
All right. So let's say you've got a client, they come to you, they're business for self, and they can't get qualified. Then what?
So that's where we go into the alternative lenders, and that's where rates, brokerage fees, lender fees come into play. Alternative lenders will look at other sources of income. They'll look at bank statements and say, okay, well, if I can see that these bank statements are showing a gross income of $100,000 and I have invoices to support those incomes of gross, then fine, we can use that. Alternative lenders will use other things like child tax credit as a source of income. So we can add other types of incomes, contributory income, where somebody's living in your home, but they're not on the title and there's not a rental agreement in place, right? So they will use those other types of income to help facilitate the affordability of the mortgage.
Okay, and for these alternative lenders, I'm assuming they've got higher fees and stuff.
They absolutely do. Yeah, typically a typical alternative lender charges 1% of the balance of the mortgage. And if you don't pay that 1%, then your rate is higher because all they do is incorporate that 1% into the rate. So you might have a 1% fee on a 3.99 rate, or a $500 fee on a 4.25 or 4.35 rate.
Okay. So for business for self people, what can they expect when applying for a mortgage?
That it's going to require a lot of paperwork. They have to be willing to share their T1 generals. They have to be willing to share business bank statements, 6, 12, sometimes months of statements. They have to support the income that they're saying that they claim but don't pay taxes on.
Financial statements?
The financial statements of the business sometimes, if it's a corporation, absolutely.
All right, Tracy. So for people that are watching and listening that may be in business for themselves and need a mortgage, how do they start? Where do they start?
I would say they start with a mortgage broker. They start with somebody like myself who can give them many more alternative and different options than going straight to their bank to start with. A lot of banks are trying to get out of this business and their criteria are very strict, but there are still lots of prime lenders and alternative lenders that will have great solutions for them that will, make it all happen for them and get them that home that they want.
Okay, so how can people get in touch?
They can call me directly at 416-788-6207. They can visit my website at tracybrock.ca or email me at tbrock@dominionlending.ca.
All right, Tracy, great stuff. Thanks for coming on today's show.
You're very welcome.
So there you have it. If you're looking for a top mortgage broker, get in contact with Tracy Brock of Dominion Lending Centers. Don't forget to subscribe to our YouTube channel, like, comment, and share our videos. I'm Joe. Thanks for watching, and we'll see you next time.